Welcome to The Explainer. I am absolutely thrilled to have you here today because we are going to unpack a financial product that has just completely exploded in popularity. We're looking straight at the incredible allure of doubling your returns on major household name stocks. Specifically today, we're talking about Airbnb. So let's just dive right into this. I want to start things off by asking you a kind of provocative question. Do you want to double your Airbnb returns without opening a margin account? Without that underlying dread of going into massive debt to your broker? It sounds incredibly appealing, right? If you've got a really strong feeling that a stock is going to pop, why wouldn't you want to amplify those gains? Well, it turns out the financial industry has created a tool specifically for this exact desire. And that brings us to this absolutely massive number, 200%. This is the precise daily target of the leveraged shares 2x Long ABNB Daily ETF, which trades under the ticker ABNG. This exchange-traded fund is explicitly designed to deliver exactly 2 times the daily performance of Airbnb stock. Literally, if Airbnb goes up 1% today, ABNG is engineered to go up 2%. Here is a roadmap for today. 1. The 2-by return seduction. 2. How daily rebalancing works. 3. The volatility decay trap. 4. Defining the ideal trader. And 5. The final verdict.
Section 1. The 2-by return seduction.
Leveraged single-stock ETFs have ballooned to over $17 billion in market capitalization recently. And to really understand the appeal here, we have to define what this actually is. A leveraged single-stock ETF uses financial derivatives and debt to amplify the daily returns of one specific underlying stock. Now, the absolute crucial word here is daily. This product is not attempting to double the return of Airbnb over a year or a month, or honestly even a week. It is laser-focused on a single trading day.
And this brilliant structural difference really illustrates why traders prefer this over traditional margin. With the ABNG ETF, you get defined risk, meaning you literally cannot lose more than your initial investment. There are absolutely no margin calls, none. Plus, it has a total expense ratio of 0.75%, which, as the issuer points out, is about 40% lower than the category average. Now, contrast that with traditional margin trading. That comes with the potential for infinite risk, the terrifying prospect of margin calls where your broker suddenly demands more cash, and just generally high borrowing costs. ABNG essentially packages leverage into a neat, accessible, defined risk box right on the Nasdaq.
But what's actually inside that box? If we pop the hood and look at the ABNG holdings, you're not just going to find standard shares of Airbnb. Instead, you find synthetic exposure. The fund holds about 199% weight in various Airbnb swap contracts to get that 2x leverage. But crucially, that synthetic exposure is backed by real, institutional-grade collateral, specifically a U.S. Treasury obligations fund, making up about 10%. That negative 109% you see in cash and other, that simply reflects the debt and the structural mechanics required to maintain this heavy leverage. Basically, it's a super sophisticated institutional setup, now made fully available to retail traders. Section 2. How daily rebalancing works. Okay, to truly grasp how this product functions, we have to see how the mechanics shift from, seductive to highly disciplined. Think of this fund like placing a brand new bet every single morning. Step 1, the fund targets its 2x daily return during trading hours. Step 2, the market closes and the fund calculates its new end-of-day net asset value, or NAV. Step 3, and this is key, the fund manager must physically rebalance those derivative swaps to restore exactly 2x leverage for the very next morning's opening bell. If Airbnb had a great day and the fund's value grew, it actually has to buy more exposure. If it lost value, it has to reduce exposure. Every single day, the slate is wiped clean to strictly maintain that 2-to-1 ratio. Section 3. The volatility decay trap. So what actually happens when you take a daily product and hold it for weeks or months? Let's run the numbers, because this builds a fascinating and kind of scary mathematical trap known as volatility decay or beta slippage. Imagine a totally flat market over 2 days. Day 0, you buy $100 of regular Airbnb stock and $100 of the 2x ABNG ETF. Day 1, Airbnb drops 10% to $90. Your 2x ETF drops 20%, taking your value down to $80. Now, day 2, Airbnb rebounds from $90 right back up to $100. That's an 11.1% gain for the underlying stock. Because ABNG doubles the daily return, it gains 22.2%. But here is the kicker. 22.2% of your remaining $80 is only about $17.76. Your ETF value is now $97.76. The Airbnb stock is perfectly flat at $100, exactly where it started. But simply because of the daily compounding and rebalancing through a choppy market, your leveraged ETF just lost over 2% of its value. And look, this mathematical friction, it is absolutely severe over long periods. As researcher Hendrik Bessembinder noted in his really extensive study of these products, levered ETFs may appeal to those who wish to hedge other positions, those with strong directional views, or those with so-called lottery preferences. He found that the long-term performance of these funds deviates wildly from investor expectations simply due to those compounding mechanics we just walked through. Long story short, if the market is choppy, the fund bleeds value. Now, I have to point out the absolute worst-case scenario, and it is mathematically outlined right there in the prospectus. A 50% drop in the underlying Airbnb stock in a single trading day results in a 100% total loss of your ABNG investment. Because the fund multiplies the daily return by 2, a negative 50% day equals a negative 100% return. A total wipeout. Gone. Now, sure, a single-day drop of that magnitude is rare for a massive company like Airbnb, but it is entirely mathematically baked into the structure of the product. Section 4, defining the ideal trader. So, considering this super seductive upside, but also the severe structural risk, who on earth should actually be trading ABNG, friends? Well, the issuer is remarkably transparent about this. Based directly on the explicit warnings in the base prospectus, the ideal user of this product meets a very hard checklist. They've got to be financially sophisticated, meaning they fully understand the nuts and bolts of leverage and compounding. They must be an active intraday or daily monitor. We're talking about someone glued to the screen, not checking their account once a month. They seek short-term tactical trades, often getting in and out within the exact same day. They are risk-hungry with a high tolerance for severe volatility. And finally, they have access to the appropriate analytical tools to time these precise directional bets. To put it as plainly as humanly possible, and exactly how the fund documents put it, ABNG is explicitly not intended for buy-and-hold investors or long-term wealth builders. If your strategy is to park your money in an asset and just let it sit for 5, 10, or 20 years to build a retirement nest egg, this structure actively works against you through that volatility drag. The complexity here absolutely comes with hidden costs if you misuse it. Section 5, the final verdict. The 2x math is, for sure, undeniably seductive. It's a highly efficient, very low-cost way to get leveraged exposure to Airbnb without the infinite terrifying risk of traditional margin. But it operates on strict, completely unforgiving daily rules. So I'm going to leave you with this final, vital question to ask yourself before you ever even think about hitting that buy button. Are you checking your portfolio every single hour to make a tactical daily strike? Or are you looking to build passive wealth for a decade? Because when it comes to the ABNG fund, knowing exactly who you are as a market participant is literally the difference between utilizing a really sharp tool and falling straight into a mathematical trap. Thanks so much for joining me on The Explainer today. Keep learning, and I will see you next time.